and in today's video I'm going to share 5 trading strategies to make you a profitable trader. Hello everyone, my name is Malik and this is Forex, a channel where I share tips on how to make you a consistently profitable Forex trader. And if you are just seeing my video for the first time, give me a like, subscribe to the channel and turn on the notification bell so that whenever I drop a video you'll be the first to be notified. So let's head to the chart. Okay, this is, as you can see, this is GBP USD. So let's go to the daily time frame. I just want to show you how I do my top-down analysis and how all listings play, all the trend line strategy, how it plays out. So as you can see, this is, I just go to my toolbox and pick my trend line. You can use the trend line or the ray, but let me just use trend line for this video. Don't worry, I'll drop a video. Just let me know if you want me to drop a video on how to show you how to use the tools on the Forex, this trading view charts. But anyway, why I'm here is the trend line. This type of strategy you can use for using trend line is basically a very simple concept whereby you see this is the daily charts. You can see how the market has been coming down, higher, high. This is from here. Look at, from here is higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. But just look at what later happened. It begins to give a lower low, a lower high, a lower low, a lower high. So basically this is what the trend line does. The trend lines help you to help to show you how the market is moving at a particular direction, at a particular time, at a particular moment. So if I'm already, for example, I draw this trend line. Let's assume the market is at this place and I draw the trend line. Maybe this is supposed to be on November, okay, November 2024 5th or something. Let's assume the market is at this side and I came and draw my trend line and I want to use this strategy to take my trades. All I have to do is just move down to the lower time frame, like the 4-hour time frame, for example, and look for a specific model that I use to trade, specific trading model that I use to. And for me, my strategy basically is other blocks, fair value gaps, and other concepts that smart money concepts. So I'll just come to the lower time frame and look for liquidity zones where price returns to before moving in the direction of this particular trend line. I like to mark my trend lines using blue color, so you can, this is not blue, this is once it's in a sell position, once it's going, the market is trending down, I like to do it to color it red, and if it's going up I like to make it blue. So pardon me. So this is it. You can see how the market in the 4-hour time, you can see how the market has been moving down and down and down. So the basic strategy is just to wait. You can wait till when the market, when this market goes back to hit that trend line. When it goes back to hit that trend line, it gives this rejection candle. This is a pin rejection candle. You can see how it goes as it touches it and rejects. Very simple strategy. You can decide to just be like, okay, allow it to close below the trend line and take your trade at this next open of the next candle, then target the next liquidity. For example, you take it like this, you wait for it to close. As it close, you take your trade here, put your stop loss just above the trend line, any high that is above this high, this liquidity zones. Then just target this part here. You just look at how it came. Look at, you can see how the price just came straight to that point before it even decides to return back. As you can see, the same thing happens here. You can just basically make money from here. See, basically you can see it came back. As you can see, it came back. It's supposed to, it was not able to go back to the trend line, but look at rejection. You can see, take your trade here. Once you see that there is a huge rejection of this candle, yes, it was going to touch it, but then there is this rejection, this candle, it means rejection, this long wick. Once it closes, you can take your trade here. You can enter your trade here, put your stop loss above the swing high here, and just target this same liquidity here, the same swing here. You can target, you can see 1:2, very easy, 1:7. You can, the idea is you can target this place. You can see it still moves, but I'm just trying to show you how this strategy basically works. Like, you can see how it quickly came for this, like before there was no rejection, there was no retracement of any kind. It just came straight to this place. The same thing you get, but of course you can target these sides. Like, you can see it moved. So this is 1:7, 1:1.7, 1:2.23. You know, these are basic risk to reward, meaning if you risk if you were risking $50 in this trade, it's going to be 50 times 2.33, meaning you'll be getting like 100 and something dollars. The same thing here. If you risk $100, $50 here or whatever, it's going to be multiplied by this 1.7. That's your risk to reward. That means, but if the trade goes against you, meaning you are losing, don't worry, I'll drop another video for risk management. If you want me to drop it, just let me know how I calculate. So this is basically the strategy for trend lines. You can go to, don't mind me, I'm more of a swing trader now, so you can go as far as 15-minute time frame and still in the direction of that trend. I'm not considering this place. I'm just giving you, we're just focusing on this particular red line. You can see this particular red line. You can see how it moves. You can see. Look at where we took those trades. You can see. So they are basically, you see how price continue respecting this line, you see, you can see how it keeps going. These are trades that you can maximize and take. They are deeper, so you just trend line. You can see, you can let me give you, okay, inside the trend line, coming to the the 15 minutes time frame, you can still draw an internal trend line that you can use to take another trade, a buy trade inside. You know, the former one was from the daily time frame that I'm taking. For example, look at this beautiful sell. You can see it. I'm just showing you. I don't want this video to be long. I just want to show you how to use your trend lines. It looks difficult, but it's not difficult if you just understand the concept. It doesn't need to be beautiful. Just look for two touch points. What do I mean by touch points? Any swing like this, any swing, it doesn't have to be beautiful, you know. Look at what it is. You just want to confirm, you just want to see the rate at which, let's assume this has already happened. It's not like it is when it swing this one that it has already happened. You just want to see when price will break this. Look at how price breaks. Look at how price breaks it. It breaks it here, and a green candle. Without even bothering yourself, you can quickly target this. So you can just come take your trade here, get into your trade here, put your stop. This is too high, if you want to be aggressive, you can put your stops below these zones of liquidity. Call it liquidity because those are zones of change, those are those zones where money are kept. Look at, just target this swing as little as this. You have already got to your 2:3. 2:3. You can see how it goes. There was no drawdown at all. Look at how it came. You see, look at, hit your TP, and it continues going like that. You see, this is a mini trend line that we drew inside 15 minutes. This is the main daily trend line. You can see how you can now buy it. You can see how it goes. You can buy and stay. If you stay in this trade, look at what it did. It kept going. Then there was a rejection here. It came. You can see how beautiful these trades move. So what I'm trying to show you in essence is trend lines are also profitable. And okay, let me show you one quick stuff here. Before you take this trade on this 15 minutes, there are some confirmations you need to wait for. You can see this is a swing high. This is a high. This is a higher low to this higher high. You can see it's now causing. This is let me show you something. From here, you can see that this is a lower high to this. This low is a lower low to this. This high is lower than this high, and this low is lower than this low here. You can see that's to signify that it has been going down. But you need a high that is higher than the previous high, and a low that is higher than the previous low to confirm that there's a change in direction of the market. For example, this is a 15-minute time frame. You can see this is a swing high, and a low here. But guess what? When the market moves to break this trend line, look at what it did. It gave a break. We call it break of structure. Don't worry, I'll explain all this in the video. If you need to know the meaning of how to find break of structures and all that, I'll explain it in other videos coming. That's if I've not done it already. Now look at, you can see that this high here is higher than this high. And where is the low of this high? Look at the low. It's still higher than the low of this. So automatically, this shows you that there's a change in market structure. Then I don't want to, okay, let me just show you. I don't want to take you far, since it's just basic strategies. I'm just showing. This is what I call a fair value gap, a fair value gap after this break of structure. I don't want you to be confused. This is just a rushed video I still have other strategies to show you, but this is one of my favorite strategies. So don't get me wrong, forex trading is all about risk. There is no holy grail strategy. That's why you have to be able to maximize risk. So this is my break of structure. Look at, once it closes above this, you can just take your trade within this zone here. Look at it. Look at how beautifully it goes. Now there's something I want to show you. When you are using this trend lines strategy, you have to draw another counter trend line. Let's assume this is what happened. It broke. You have to draw another protective trend line. I call it protective trend line. From this, you draw another one. Do you know what you are doing? You are trying to protect yourself. That's in case you are not targeting this high, you are not targeting this swing here. You want to hold on to you want to hold your trades to see the potential on which it can go. You can see this is it can go up to 10, you understand, but you have to be careful. First, it's safe to target the next liquidity here. You know, it's safe to target the next liquidity. So what you do is you can draw this. This is my buy trend line, a counter buying trend line. Since it was the sell trend line has been broken, you have to draw the buy trend line. So this one you can just use the way you want. You just want to use it to guide your trade. Like, see, coming here, once the trade is touching here, you should already be afraid, because if you can see it, when it touches, let me draw the line, when it touches this place, when it touches this zone here, you are supposed to take profit and just leave the market. But let's assume you are an aggressive trader and somebody that can hold trades for long. You know, you are not like quick stuff. You are waiting. You want to hold trade for long. Then you have to draw this trend line. Once it is coming, once your prayer, I don't want to use prayer. Your wish is that it should not break this blue line. Once price does not break this blue line, and even though it comes to that blue line, there is a quick rejection, you should know that yes, price is going to continue in the direction of your trade. Now let me give an example. You see, as price touches this place, this blue line, you can see how it rejects. Look and see weak. It rejects with a good engulfing candle, like full bodied candle, green candles left. That's to tell you that there is a lot of power this trend line is holding. Now look at how it came back, but look at how it aggressively left. You can see it has not still touched your stop loss. If your stop loss is around here, it does not touch it. You can put it around here, or you can put it around here. That's if you want to hold. If you want to hold the trade for long, you can put your stop loss here just to be safe. But if you want to just target this place, you want to hold it to this place. If you just want to target this next swing, you don't need to keep your stop loss here. That's aggressiveness. So look at how it goes. So you can see the momentum that price move away from that trend line, and the next thing came a broke. So even if you are holding on to the trade, you can manage your trade and just keep moving your stop loss till when it comes. So once it breaks this line, you already know there's a problem. You can get out from this place. See, it's up to 8. You can still get out here. So whatever. So that's how trend line strategy works. I think I've taken so much time in this trend line, so I won't take much time in the rest. Let me see. I won't be taking much time in the rest of the strategies. Let me still use the daily time frame. So support zones are place of liquidity, a place where it's a place where the markets, it's not really it's a zone. I can't say it's a line, because I see many traders, some traders just go draw this line and feel like, okay, let's draw a long line, that's my support. Draw another line, that's my resistance. You know, it's not just about lines. It's a zone. It's a zone where you are expecting price to reject and go the opposite direction, and where you are the same thing with what do you call it, with resistance. So the down part, I'm just randomly just picking the points on, so when you go on your chart, just try and find it yourself. I'm using a daily time frame, but let's go down to like the 4 hours so that maybe you can see it clearly. You can see these zones are chosen clearly. Because the daily time frame doesn't have much candle. The candles are just So this is it. This is 4 hours. Here I draw it from my daily candle. So these are zones. These are zones of liquidity. This is, we are talking about support and resistance now. These are zones. I don't usually use all those moving averages. Don't mind me. I included it in the lecture, but I don't. You can read about it, but I don't really like them, because trading in this period in 2025 is something that you just need to get a feel of it. You just need to understand the concept. You understand? You have to understand the concept. You just have to get used to it like your bread and butter. You don't need all these indicators that all those things. It complicates things. You just need to be able to see trading as just like a river that flows. You can't flow against the tide of a river. You can't flow against the tide of a river. You'll just get burned, tired, but if you flow on the right channel, you flow with the water, the path of least resistance, you won't have anything to worry about. So that's why I'm more of a trader that just follows the market, like the way the market flows. I don't need any hyper indicator too, so I don't do indicators. Seriously, I have nothing against people that do indicators, but I don't do it. So basically, you can see I just chose a random place. So what support and resistance level means, I just use them for confirmation. I don't really use the strategy, but sometimes I just use them for confirmation. It's more of the retail side, but don't worry, as we keep learning, we'll get to know ourselves better and know what works. So support, this is, you see, you can see how price came to you can see where price is coming from. It came from this side, and what do you think is around here that makes it just turn and goes the opposite direction? Just watch. It came back to that same place. It didn't just break it down, it moved up again. You get me? It got to this place and moved back again. So I want to let you know that this place is what we call supports. These zones are what we call support. There's internal support and there's external. Like this place now, you can call it an internal support. This is an internal support. You can see when price gets to a place and it rejects more than 1-2 times, then you can classify that place as a support. What it means is, like, for example, if it's just like a floor that the price cannot break, because there are a lot of orders there to buy to the upside. So the price, that means the buyers here are stronger than the sellers. So there are strategies that people use, that most traders use, that once the price comes to this particular place, I don't want to talk about scalping now, but I think I should just include it here so that we don't make this video longer. When you come to this place, you can go to the smaller time, though this is a higher time frame. Let's just use. So when it comes, you can see this is a zone. It touched it 1, it came back, it touches it 2, it still came back. You can see the rejection. It shows that there's a zone, there's a liquidity, there's a lot of funds around this side. So the money, the buyers are higher than the sellers. There's no, but you have to be careful, because the more it keeps touching, price keeps touching and retesting a particular zone, it means it is about to break. So I advise you, if this is your strategy and you want to master it, once you see that the price is here, has visited a zone before, you wait for it. Once it comes back to that zone, you wait for a confirmation. What's a confirmation? A confirmation is basically a full candle that closes towards your direction, meaning that, for example, this is, you are anticipating to go up, to buy to the upside, and you can see a rejection here. It closes. Look at it, closes. Look at the green candle here, it closes. And the next candles that formed after it, you can see how it was just rejecting. So you can just come and take your trades. If this is your strategy, you wait for it to close, you just take a trade from here. Simple. It's not rocket science. Just target the next liquidity. These zones. What I mean liquidity, I mean swing points where money that's where money is. You just put your stop loss just a bit below it. You can see 4 is to, if this is your strategy. And usually people that trade support and resistance are usually people that know how to trade ranging market. Don't worry, I will show you, because we have different types of market. We have the trending market. When the market is moving in one direction, either up or down, like from the previous analysis I gave you about trend line. When the market is moving in a particular direction, that is a trending market. When the market is neither going up or coming down, something like this. You see, I'm showing you something. Hope I'm not digressing. So if the market is showing you, look at, it's more like in a box. It comes down, it goes up. It comes down, it goes up. It comes down, it's not breaking. That's what we mean by a ranging market. So you can see this is a trade for you. But if you don't get out at this plan, you are waiting for it to take it. You can hear this way is a resistance. So this is our support. The down part is our support, and this up is our resistance. What is resistance? Resistance is just like a ceiling. In as much as support is like a floor, resistance is like a ceiling that the price is struggling to break. So if you are a resistant and support and resistance trader, once it comes to this zone, you buy to the upside, and once it comes to the upside, you sell to the downside, and that's how it works. Look at it. You see it broke, and once it broke the resistance, it rejects. Look at it, it touches it once, and this is, let me tell you another thing. Let me show you something again. This is another internal resistance level. You can see it can't break here, so automatically it's coming down here. But momentum, the buyers were stronger than the sellers, so they pushed the price to break these points. This is resistance level. So you can see how it's moving. Now, if you are a resistance trader, what you have to do is, if you are a support and resistance trader, what you have to do is just wait for price to return. You can see, as you can't just say because it has broke the resistance, then price is about to move forward, but then you just come and take your trade and start going up. You can see that no matter how your stop loss is, no matter how long your stop loss is, you can see it to just get you out of the market. You understand? So you have to wait for confirmations. Once it hits it, you have to wait to see whether it's going to break and retest. Let me show you something. Let me show you. Where is this tool? You have to see if it's going to break and retest. Okay, I can't find it. So okay, you have to wait to see whether it is going to break. As it breaks, it's going to come back, retest this resistance, then move. Okay, so that's how to trade it. You have to wait for it to be broken. So once it breaks a resistance and it comes back and tests this point, it means the resistance has now become a support, meaning you look for confirmation, like a green candle, fully engulfing bullish candle, and just enter a buy position. But look at what happened. It rejected so fast. So what is it supposed to tell you? You wait for some confirmations. You can see when it rejected, it came back. That's why it's not a line, it's a zone. If I was just drawing one line here, I probably would not even know. Look at, it's a zone. It came back to that zone. That is retested the zone. So you can decide to take your trade, your sell trade here, based on your own strategy and things you have marked out for before you take a trade. Then you just come here, click your trade. Don't need to, it's not rocket science. Put your stop loss above this and just target the support. See, but this is you have to be an expert to trade this kind of market. So that's for support and resistance. This is support and this is support, this is resistance, and the breakout strategy is what I explained here. If after breaking out, you can see, let me go back to 4 hour time. If after breaking out, these are just basic strategies. Tell me if it's valuable, if you have gotten something out of it. Comment if there's something you want me to react to. This is a breakout strategy. So once it breaks out, you wait for it to retest, and then you move. Some some traders trade this way. They don't trade around this zone. They don't trade around this zone. They don't trade around this zone because of how difficult it is. Because you can easily lose a lot of money if you are trying to be perfect, in this market. They don't trade all this. They wait for it. When it's they don't trade ranging market. They wait for whatever price want to do. They wait for it to do whatever it wants to do. Once the price get out of this range, this box, that's when they trade, and that is a breakout strategy. So this is a breakout where it breaks a resistance or a support level, then it will test and it moves. If you can check, let me show you. You can see what's happening here. You can see what's happening here. You can see what I mean. So you have to have a confirmation. You can see this is our resistance. Resistance. See how it rejected and came back, went aggressively and broke it, came back again. So in this avenue, you just need to be waiting for the test. You have to wait for the test. Came back. What you were expecting for it to retest here, but look at what it did. It just went. It just came back, went back. But look at the retest that we have been waiting for. For a breakout trader, this is a retest. Look at that. I tell you, these things are not like a line. You cannot just draw lines like this is my resistance, this is my support. You can't draw it. It's a zone. It's a zone. It's an area. It's an area. So you can see it broke the zone. It came back, it retested. For someone that is a breakout trader, you can just take your trade here, getting your confirmations here. Once this candle closes above this height, this zone, you just take your you take your trade. And that is why risk management is very important. Take your trade, put your stop loss below, and target the next high, which is this. If you feel like this, which is me, I always love targeting the next swing high. I don't want to hold trade for too long. But as a swing trader, you can do it. So you can hold trades. You can see how beautifully that went. So I'm not a scalper, but I'm just going to introduce you to it. The 1 minute time frame and the 5 minute time frame is a deadly zone. Is a deadly zone, and there's a lot of noise. Before you know, you get something, release a news, and before the up and down. So I'm not really a fan of that strategy. But if it's something that you love and you like making quick profits and covering those small points in the markets, catching small movements, and you can try it. But for me, I don't try it. You can see at the point in time it was, if you want to check, you see market is just coming down. Like I said, I usually use red for sell. I'm just choosing random places. That's how trading is. When you get it. So you see, randomly you can see how price. So a scalper will just be waiting for this price, to just break this line, and that's all. They are taking their trades. Once it breaks, you can see breaks. They can the lowest time frame I have here is 1 minute, but they can even go less than 1 minute. Once it breaks with an engulfing candle, what they wait for is just see it breaks, it closes outside the trend line, and it came back with this candle to retest. Awesome. They get into their trade. I'm trying to rush the video. I don't want it to stay long. I want it to be long. It's already long. I talk a lot. Don't mind me. It's my nature. So you see, very fast. Where is it targeting? I don't know. Probably can target this place. A scalper will not even put his stop loss here. He will put it just below here. You see, very tight stop loss. You can target here, or here. You just imagine targeting this place. You can see how you can maximize a lot of profits. That's 11. 1 is to 11. So you are risking $50 times 11. You can see that's $550. So it's a lot of it carries a lot of risk. You can see it's very tight. So the price can just come back here and go. It can just move back to this zone and go up and they have lost. But for someone that is a swing trader, a day trader, you can just put your stop loss below here and you can still make your 1:2. So that's basically it. So my last strategy, I know people don't like, people will just be like, this is not a strategy. A strategy is supposed to be something you can be using to, you can just see and just chart, but that's not how. So I purposely made sure that risk management was one of the strategies that I'm sharing with you today. And risk management is, for me, is the best strategy. It's the best strategy because without protecting your capital, you cannot maximize profits in the market. There is nothing that is amazing than someone who can manage their finances, their capital. So please, you have to be able to understand position sizing. If you need a video on position sizing, risk to reward ratio, stop losses, how to use stop loss, how to place your stop losses, the right place to put. So you drop it on the comment section so that I can make a video for you. I just don't want to be making random videos. That's how I want this channel to be. I want it to be an interactive channel where you let me know what you want and I drop it for you. So thank you. If you have watched to this time, if you have watched to this level and you have not subscribed to the channel, please do well to subscribe, like the video so that YouTube can recommend it to others, and share with your friends and everyone that is interested in forex trading. And also turn on the notification bell so whenever I drop a video you'll be notified. Thank you and see you in the next video. Bye.